Hey, welcome to this video. If you arrived here, you're probably searching for a view of behind the market, so I'll go over how it works and give you my 2 cents with it. I think it's a good use of your time. I'm always coming out with videos like this, so consider subscribing. If you want my free training on the number one simplest, fastest way to earn a full-time income from home, you can click the link below. You'll see my email opt-in page. Enter your best email. I could send you my free training if you want. Behind the markets, let's dive in. So what this is basically, it's an investing newsletter written by this gentleman right here, Dylan Jovine. And he started his career in 1991, working for a Wall Street investment banker. He's also founded two successful companies in the finance space, so he's been around the block, which is a good thing. And his main investing strategy is to go for mid-cap companies with market capitalizations between $1 and $10 billion that are undervalued companies, that they're undervalued due to some temporary setback, and maybe there's some bad news, something bad in the news that makes their stock tumble, and your goal is to jump on these opportunities before the price inevitably goes back up. It's definitely a valid strategy. This is kind of like what Warren Buffett did when he was first getting started, if you can time your picks right. But now, besides this, he also considers companies that have high returns on equity, low debt, and a durable competitive advantage. Now, the real question, though, is can he pick good stocks, right? And for what I've seen in my research, yes, he can. He does. When you purchase Behind the Markets, you'll actually get access to his closed pick stocks over the years, which is really cool because a lot of newsletters won't show you their old picks, and it kind of makes you wonder what are they hiding. But he's very transparent. And most of them have actually gone up in value quite significantly. For example, he recommended Bank of America 2 years ago. That increased 53%. Floor & Decker, that went up, Decor, 138%. Curatel Biotech went up 275%. He's been focused on the biotech sector recently. Medifast went up 55%. And of course, some of his picks did go down. No one gets it right 100% of the time, but the winners, I think the winners definitely more than make up for any of the losers. And you might have heard of some of these companies I just mentioned. That's because, again, he focuses on well-known companies with mid-cap stocks. These aren't penny stocks, in other words, which I don't recommend anyway because those can be quite volatile and risky. Now, the price of Behind the Markets is $79 per year. Very reasonable. There's a 30-day money-back guarantee. And with your purchase, you'd get access to a portfolio of trades that he recommends, along with his research and commentary. You also get access to some video training, which is, on how the strategy works, which is very nice because a lot of newsletters don't actually train you. They kind of go, here are my picks, and go buy these, sell these, but they don't really train you on why you're doing that. So I like that there's some video training. You also get monthly portfolio updates, what stocks to buy, what stocks to sell. And finally, 24/7 access to the membership website where you can find all of his past reports, stock picks, and other resources. All in all, Behind the Markets is a perfectly good investing newsletter. Just be aware there are some upsells that'll cost in the thousands of dollars. And which is fine. I don't have a problem with that. That's just clever marketing. And I believe you can actually find the upsells on the website. I forget where they were. I think they're up top somewhere. But anyway, so Behind the Markets gets my stamp of approval, and you can check it out if you want. But look, you're here obviously because you're looking for a way to grow your wealth, make more money, maybe even be able to earn money from the comfort of your own home. Now, what a lot of people do is they'll take what little money they're saving from their job, they'll go immediately to investments. So they'll go from step 1 to step 3. You don't want to do that. I mean, unless you're earning a ton of money from your job, like you're a heart surgeon or something. But most of us aren't heart surgeons, and we're not able to save that much from our day jobs. So what you want to do instead is take that little money, put it into an online business, something that can grow, something that can eventually pay, $10,000, $20,000, $30,000 a month, way more than you could ever make from a day job, most day jobs. and something where that has lots of leverage and automation in place, so you're not trading time for money. And then what you want to do is put whatever you've left over from your online business and then start thinking about investing, whether that's in stocks, crypto, real estate, gold and silver, whatever the case may be. Because investments are money that you're going to hold for the long term. It's not money that you need, right, that you're going to use to live, right, and to survive and thrive. Investments are really something you should hold on to for, 5, 10, 20 plus years. Anyway, that's the order I would do it in, if you want to achieve financial freedom as quickly as possible. So now, if you'd like to learn, so the next thing, if you'd like my free training on how to do the step 2, how to build out a very profitable online business so you can make lots of money and then put that into investments, what you can do is click the link below. You'll see my email opt-in page. Enter your best email. I could send you my free training that'll just detail a very simple, beginner-friendly business model that has tons of automation and leverage in place. Very high profit margins. You don't need a lot of startup capital. You need about maybe $100, $150 a month, and that's it. You could be a solopreneur, just one person on your laptop, and maybe eventually quit that job, right? Or keep working your job and just do this on the side. But I think eventually the goal should be to quit and work from home full time, right? So, and that's it. So I hope you enjoyed this review. I hope to see you on the other side of that link, and I hope you have a great day. Bye.